For more on Walmart, we are joined right now on the phone by Sanford C Bernstein analyst Colin McGranahan. Colin is one of the most accurate forecasters for the company, according to Bloomberg data. Colin, so glad to have you with us. Sheila just gave us some of the numbers there. I mean, they beat on the bottom line, 117. That was better even than your expectations. But revenue for the fourth quarter seems a little light. Do you make anything of that?
Yeah, the sales did come in soft, and the comps are a little disappointing here. Obviously, I think that's what's propelling the stock on the first trades. We'll have to listen to the call to really understand whether it was food deflation. We had expected that maybe they were getting less trade down benefit as they're starting to anniversary some of that, but certainly the revenue was a little disappointing. The surprise in the quarter and what really drove the upside was that Walmart leveraged operating expenses. This is something they've been adamant about, talking aggressively about, and it's been a real show-me story, and they actually leveraged operating expenses.
How did they do it,
That's the surprise in the quarter. Again, we'll need to listen to their call, but it has been a focus of the company globally across the organization to tighten costs, reintroduce the productivity loop, share the capabilities across the organization. So they've gotten very serious about expenses, and this is the first quarter where we're starting to see that come through.
Colin, a quick question for you. How much further do you think Walmart can squeeze some of those costs out of the business, because they have had gross margin improvements on that side for at least the past 3 quarters?
Yeah, it looks like we're at one of those points where the baton, in terms of what's driving earnings growth, is switching. Gross margin has really been the driver. I think they've reaped a lot of benefits from the initial stages of Project Impact. There will be more coming in the future from global sourcing, but we're probably starting to see, against some tough compares, a lot less gross margin expansion. The baton is now being shifted toward expenses. This is a company that has not leveraged expenses very successfully in the past. It's not that there's fat, but I think that they are getting smart about how they can be more productive as an organization, and we'll see better expense performance going forward.
Colin,
they are guiding to expense leverage for the coming year.
Sorry, Colin, very briefly, I do notice that they did get a benefit from a lower provision for income taxes. Do you think that there's a question about the sustainability of that going forward?
We'll I'll have to go in and look at how significant a contributor that was. Obviously, that income tax rate does bump around quarter to quarter, and we very much consider that non-operating.
Colin, how do you see Walmart versus some of its comparisons? You know, before the recession, we talked a lot about Target gaining a lot of the market share. It seemed like, at least as far as advertising went, Walmart really seemed to be hammering its price-conscious message. Is this still the way to go for them?
Well, they were perfectly positioned for what was a very severe and deep recession, while Target was just about as poorly positioned as you could hope to be. Obviously, as the recession now is ending or has already ended, we're starting to see a reversal of that, and Target's positioning, which is more upmarket, more fashion-oriented, is starting to resonate again. I think it's important to note that this is the first quarter since 3Q07, since the official start of the recession, that Target outcomped Walmart.
All right, Colin, thanks so much for your time.